Our global investment CEO and CIO. Bob, as if that weren't enough, you were one of the thousands of Americans stuck in Dubai when the military action broke out last Saturday. How long did it take you to finally get on a flight home?
4.5 days, including a couple calls in the hotel to move down the lobby in the middle of the night because there were bombs around us. I did see one dispersed with anti-aircraft machinery in the air. Another one hit an empty parking lot and heard lots of bombs. It was a weird, surreal sort of experience.
It sounds almost like this rush, like the fall of Saigon, where people were just desperate to try and get on any kind of aircraft. What airline did you finally get out on?
Emirates to London, and then American from London home. 30 hours, took 30 hours.
Well, that's actually not even that bad. Some people were,
I guess you're right,
hopscotching all over the place. Well, we're glad you're back safely.
Thank you.
Give us your assessment of all that you've seen in the market since the start of the military campaign, which, of course, was last Saturday. And then you throw in the jobs report that we got, much weaker than expected, plus the private credit jitters.
Yeah, a lot of things existed before we had the decline. Stock market went nowhere from early October until last Saturday, as people were legitimately worried about all that and yet watched earnings move higher. Now you throw this on top of it. To me, to be real simple, the key is the price of oil. You just talked about it in your last little segment. And look, the markets can handle a temporary spike in oil, but not a prolonged one. So if oil comes back down through whatever means necessary, supply being thrown on the market, the economy should be fine. But if oil stays up here, economic growth will begin to falter, and then these high valuations will have to come in further because earnings estimates will have to come down. Let's hope we don't go there, Liz.
Well, that is the next sort of step, that you start to see people get nervous. They shut their wallets. They don't buy goods. They don't buy services. But that said, you still look at stocks and say, so many of them have finally come down from super high valuations. What looks good to you?
Yeah, so I would put my fingers out and try to assess the financials. I know they're down in part because of the credit problem, so I'd be careful of where I went within the financial. But some of the big banks with strong balance sheets, I've gotten hit hard over all of this. As you pointed out a second ago, this is not new with the war. One of the big surprises to me in 2025 was how tight credit spreads remained just about all year long. And now we're beginning to say, maybe I should be a little more careful about that credit, and those spreads will widen. If they widen a whole lot further, that's another threat to the economy, so we have to watch that very carefully.
Boy, it sure is amazing how quickly the herd can shift direction and sentiment can turn on a dime. We saw it over the past couple of months with some of the big chip makers, but actually, tech is looking relatively decent on a day like this, which is interesting. So maybe those valuations, investors have gotten smart enough to really look and say, wait a minute, this was trading at a 42 PE, but now it's more like 29, and that looks a little more attractive. So what is the number?
And
go ahead.
I would also throw in that of the earnings growth in the fourth quarter, and it was a good earnings report, 60% of the earnings gains came from technology. So these companies are still producing the goods, and everybody's worried about what AI is going to do, capital spending, all those good things. But I think the technology stocks need to be part of your portfolio.
It's great to see you, Bob. And I hope they gave you snacks on that 30-hour flight.
Yes, we had plenty of snacks. Thanks.
It's all about the snacks. Good to see you.